What's going on, everyone? Gilman with Live Wealthy Stocks, back with our weekly Apple update video where we take a look at this past week, how Apple stock traded, key levels of support and resistance we're looking at, as well as some pieces of news that came out. All of that to see what Apple could be doing in the near future. So real quick, if you enjoy videos like this, don't forget to hit that like button down below, subscribe to my channel if you are new, and comment down below what your thoughts on Apple are, and I'd love to chat with you guys down there. So let me go ahead here and hit record, and we will get right into the video. If you like what I'm using here, I'm using Webull. Link will be in the description if you want to sign up. We both get some free shares. But let's get right into it. So first things first, not a great week for Apple. The first 2 days actually started off pretty nicely for big tech in general, and then we saw a sell-off related to the rising yields, related to also what I'm suspecting to be quad witching. So let's take a look at some news that happened. We'll take a look at price action, levels of support and resistance right after that. So first things first, we're talking, we covered this kind of earlier this week as well, but I want to kind of recap through everything. So Apple got a price target increase with a $225 bull case on long-term growth. So you guys remember Monday, we covered the wearables growth that Apple experienced. And so, basing it on that, so this analyst here talks about the services and wearables business, seeing a clear path to $100 billion in services revenue by FY25 and $70 billion for wearables. And that should help margin expansion and help smooth out the cyclical nature of the hardware business, right? So you guys remember, Apple releases their iPhone once a year, sales spike, we see a crazy amount of new iPhone orders being built, but with wearables and services, it's more of a for services especially, it's more of a recurring payment to Apple, right? Whether it's Apple Music, whether it's Apple Fitness, whether it's iCloud, things like that, Apple TV. That's recurring revenue, whether it's November and we have a new iPhone, or it's March and we've got nothing exciting going. Same thing with Macs. When they release new ones, they'll see sales, or they'll see sales right before school starts, things like that. With services, you get rid of that and you hopefully can have a continuous growth pattern, which can be great for more revenue throughout the course of the year. So that's what this analyst is talking about. Using that, what they're saying is they see a 100. So they had a price target of 163. Now they're saying 175 is what their price target is, with a bull case of 225 and a bear case of 90. So best case scenario, they think 225. Worst case, they think 90. One thing that I'll tell you right now is if we were to zoom out on the daily chart and I were to just draw two lines, one going from kind of where we are right now to 90, we have if you take a look at this black box, we got a 24.9, let's call it 25% negative downside. So if Apple goes to 90, worst case scenario, we got a negative 25% chance. But if Apple goes to 175, right, we're talking a almost 50% in the mid 40s of kind of the upper end. And I'm not even talking about the bull case of 225, right? I'm talking about their price target of 175. So as I continue to say, there's certain reasons why I stay bullish on Apple, this being one of them. Their growth has been absolutely crazy as well this past year, especially with the coronavirus pandemic. And I think that is, one of the reasons why. So this other article also talks about, how Apple has been trading. It closed at $119.99 this past Friday. So what is going on, right? Why is Apple losing 7% in the last month when the S&P was not doing great, right? The S&P only gained 0.17%, so pretty flat overall. But Apple is 7% behind the S&P, right? Which is not something that we like to see. So why is that happening? That's what this article, tries to focus on. But it also talks about Apple has coming, right? So they talk about, Apple needs to display strength as we get closer to the earnings. We're expecting earnings of 99 cents a share. And this next line here is the key point, a year-over-year growth of 54.69%. Again, for a company the size of Apple, to have this much growth is absolutely crazy, right? We're talking an over $2 trillion company, I think, depending on where the stock price is right now. So that's what we're talking about, you guys. they're expecting earnings of $4.48 per share and revenue of $336.56 billion for the entire year, which would represent changes of 36% and 22%. So Apple, again, being as established as it is now, growing 36% in earnings and 22% in revenue, you know, pretty good right there. So that's what we see here, you guys. This article talks about, you know, some other PE ratios if you're interested in that stuff. But overall, you know, what we see is hopefully as we get closer to earnings, good things are coming for Apple. Still a little bit away, but you know, I'm trying to be kind of optimistic here. But, you know, as we always like to do, we like to cover the downside. And the downside here is Apple was ordered to pay $308.5 million in a patent infringement case. So that's, you know, a downside. It's not a crazy amount of money, especially for, you know, a company this size, Apple, but it is still a, you know, lawsuit that they have to pay out. It's still going to go on the books. That being said, though, I'm like 90% sure that, you know, Apple will find a way to go back. I don't know too much about law, so if you guys do know, drop it down in the comment section. But it seems like every time someone's ordered to pay, they go to a higher court. So unless this is the highest court, which again, not too familiar with law, we could see it kind of drag on for a little bit longer. So now let's take a look at the 5-day chart, you guys, and we'll see what we see. So, you know, great start to the week. We at one point hit a high of 127.22. We were above the 89 EMA. And then, you know, we saw a little bit of a fall Thursday due to the bond yields that we covered. And then Friday, I mean, you take a look at the action on Friday, right? Down, up, down. And then, I mean, this is quad witching at its finest, right? Going from 120 to 120.97 at like 351, and then within a matter of you know, literally 9 minutes, going right back and ending right below 120, which I think one of you guys also pointed out. So I mean, I think that's quad witching in action. Quad witching I talked about in one of my previous videos. It's when you know, we got 4 different expirations happening with you know, stock options, futures options, and some more. So a lot of money on the line is the main point, and market makers will make markets go where I think they see, you know, the most profit potential. Now, take a look at Apple, right? And just to kind of show you that it's quad witching related and not just an overall market sell-off, you take a look at Amazon. Amazon did the exact opposite. Amazon ran. Typically, big tech kind of does things in parallel. Amazon ran from about 30.55 to 30.77. Again, in the last 9 minutes of the market, right? I think that's when the algorithms kick in. That's when the computers start to, you know, theory of Max Payne, and then whatever, you know, big money where they need to pin the stock for that day, right, is pretty much where it'll go. If you take a look here, right, it came back down right after. So that's what we see here, you guys. You know, similar thing with Tesla. Tesla also ended up running. Take a look at that, right? 648 to 657. So quad witching can be a little bit kind of annoying to trade in because anything can happen, especially in the last like 30 minutes to an hour, as we saw here in many of these cases, the last 10 minutes. So again, Apple is not looking too good, unfortunately. Staying bullish. I have Apple shares. I have that long call going out to July that I'm still down on, holding for probably another week or two to see if Apple can turn around a little bit. I needed to get back above the 89 EMA, which I'll talk about in just a second. But what are we looking at from levels of support? So going back to Friday, right, we try to hit up against this 120.148 on the daily chart. That is also our first level of support. So let me zoom in, and I won't zoom in and out anymore because I know some people don't like that. That's the first level we have to break, you guys, 121.48, and then it's 123.69, and then we've got 126.65. Those are the 3 levels that I'm looking at on the upside. And then if I bring in the EMAs here, what we'll see is right there, the 89 EMA at 124.89. That's my goal for Apple this week, hopefully even the next couple of days. If we see a little bit of a push up, we can you know, hopefully capture that and move forward from there. Target for this week, you know, hopefully we knock out 125s first, establish that as a good base, right? What I don't want is for us to go up one day and end the day above the 89 EMA and then come right back down the day after, and now we're below the 89 EMA again. So I want a slow rise up, take a little bit of breather, and then keep moving up. So if we can get, you know, 125s in the first 2 to 3 days, we could end the week at the 127, which where we were last week, right? But in order to get there, what I'm saying is 121.50 is what I'm watching, then I'm watching 123.60s, then I'm watching 126s, but really after we get through 123.69, 124.89 is what I'm watching. Now, if we see more downside, could totally happen, right? Anything can happen in the stock market. 119 is my first level, and then we got 116.20 as my two kind of downside levels. If we take a look at not the EMAs, but the moving averages, we do have the, oh, where did my 200-day moving average go? Excuse me, let me bring that guy back. Moving average 200, done. We got the 200-day moving average coming in at 116 as well, which gives me a lot of comfort at that level. Again, anything can happen, we can break that. But if I were to hide all drawings and I were to zoom out, right? The last time we touched it was in the coronavirus pandemic when everything was selling off. If we go back below that, this kind of mid 2019 timeframe, where we also saw the 89 EMA being breached. You know, same thing with the 89 EMA, you guys. This bottom line we touched a couple times last year, but we rarely break above it. Again, coronavirus pandemic, and then that mid 2019 sell-off we saw. So that's the reason why I'm really hoping that we can finally get back above it, stay above it, and start to push up. My goal for Apple would be, again, if we can knock out mid 120s first half of this week. Let's say we do that, you know, Tuesday, Wednesday, maintain that. Thursday, maybe we push up a little again. So if we can get 125, that's my first target. If we can knock that out, 127 next. That's what I'm looking at, you guys. I hope you guys enjoyed. If you did, don't forget to drop a like, subscribe to my channel, comment down below what your thoughts on Apple are, and I'd love to chat with you guys down there. Let's remember to be a bit better every single day, and until next time.